Good afternoon. Welcome in, everybody. Excited to share you guys updates from Bighorn Capital Fund today. We're going to be sharing everything from the past quarter, and we're going to be highlighting several different offerings today. So one thing I'm really excited about on this investor update is our previous updates. We've been updating you guys on our Lilac Way offering. We've had, I think we're on our fourth or fifth update on that deal because that deal started over a year ago now. But today, we're not only going to update you on the Lilac Way offering, but we're also going to share a little bit about Cathedral Group, our equity offering, and also our Ponderosa debt offering. Really excited to give you guys a comprehensive update on everything Bighorn Capital Fund. Quick disclaimer, guys, I'm going to be sharing a lot about our past performance, which has gone really well so far, but I do want to always give the caveat that past performance does not indicate future success. And I always encourage you guys to read our private placement memorandum, our subscription documents, the deal disclosures, all the different documents, and understand the risk before investing. And also, this is for accredited investors only. So we're going to kick it off with Lilac Way today. Okay, guys, really exciting, positive updates on here to kick it off. Last time we spoke with you guys, we had just finished up renovations. We were finishing up the last few units. And now that we've done that, we are starting to get really good occupancy. So I'm going to skip to number 2 is we've got over 95% occupancy, which has been a huge success, and been really proud of this asset from where it was at and where we've taken it, and especially being able to fill all this up, fill all these units, and really hit our projections, actually over our projections in many areas, which I'll show you in a second. But where we're going next is we've actually already started to engage lenders on our refinance. So you guys can see we've reached out to Morgan Stanley, Greystone, a broker with Greystone, and also another third-party broker to look at. We're on the initial phases of starting to refinance. So these are big loans. They take quite a while. So we're not planning on actually having this all done until Q1 of next year. I would love to accelerate that to get it done before the end of the year, but I think that's probably unlikely. And again, there's no guarantees by end of Q1 next year. I want to be clear on that. We're working with big, large banks that require a lot of documents, have a lot of due diligence. So going to be a pretty big process there, but I want to let you guys know that we've already started it. And just a little bit more background, I'm actually going through the same process on another deal, our Hillside Casper project, which was 66 units in Casper, Wyoming. I'll be happy to share a link with you guys. That was a really cool story that's now gone full circle. And it's a big one where we made a huge transformation. And it's a really cool story that I'm excited to tell about me and my partner doing that one. But we're going through the process right now. We're a little further along. We've actually got our term sheet. That one's moving full steam ahead. And then this is the second deal we're doing with those other lenders in that space. Okay, that's a quick update there. I did want to highlight here, our furnished rental are still performing really well. So check out these numbers for October. All right, we track all of our gross revenue from our short-term rentals. So you can see our lowest one is $1,695. That's actually a month. That's one that it's more permanent because you can see it's locked in. But look at that. That's our lowest amount. The majority of the other ones are almost all over 2,000. Some of them are closer to 2,400. Right now, if you go up here and look at my projections, so I've done this on all of our big assets that I purchased. I always like to give a base case for rents and a target. And then I started doing this new one, which is called a STR mix target. So that means short-term rentals. So what I like to do is I like to mix in a certain amount of units on a big multifamily and allocate those directly to short-term rentals. Because as you can see, the revenue is much, much higher. And this is now the third or fourth asset we've done this with, and we're continuing to do it on more. But I just wanted to show you like where we estimated. We were guessing around $1,800 a unit. Well, check it out. Like the majority of them are blowing $1,800 a month out of the water. Guys, and we're doing this in October. This might be expected in maybe the summer months, but we're literally doing it still in the off-peak season. Right? Our hottest months are typically June, July, August, especially down in this area where there's a lot of summer travel. But I think really proud of how the team's doing here and just a bunch of success. I do want to show you a quick picture of one of our buildings. You can see building number 7. This is one of the recent renovations. You guys have probably seen some of these photos before, but just wanted to give people a feel for the finishes and what we've done on some of these units. Okay, let's now segue into our next offering. Okay, this is Cathedral Group. All right, some of you guys today on this call are part of this investment. I wanted to share a couple case studies and recent big wins we've had with this equity fund. So here are 2 different properties we flipped in Q3. They actually ended up closing, you can see on the very last column there. They closed at the very beginning of October, but the majority of this work was done in Q3. So you can see some of the purchase price, like this one in Laramie. We bought it for $290, rehabbed it for $45,000, sold it for $430. So the profit share based on the agreement on this one, we ended up making $42,369 on that property. So very, very profitable deal for the Cathedral Group, okay? Second one was this one in Evanston. This is actually the pictures, right? You can see some of the before photos here on the left, and then in the middle and right, you can see what it looked like once we were all done. But this one we bought at a much lower price point. I always have a special place in my heart for these ones because they're always very affordable, right? Like look at our sale price. This house was selling for $216. So there was obviously a lot of buyers at that price point, and I always like that because it creates more competition. But you can kind of see the rehab was $29,000. Profit on this one, a little less, but still 6 vessel none the while at $18,000. Okay, so 2 really great projects that I wanted to kind of share, and this is something that we're continuing to repeat and loading on our pipeline with more just like this. A couple other projects we have going with our equity fund. This is kind of, we'll call it the flagship, the big one that we took down. This was a 29-unit multifamily in Wheatland, Wyoming. So if you guys check this out on the map, give you guys a feel with people who might not be from Wyoming. Wheatland is about halfway between Casper and Cheyenne, which are the 2 largest cities in Wyoming, right off I-25. Right, so this is a much smaller town, about the same size of Evanston where we did Lilac Way. It's actually going to be a little smaller than Evanston. Man, we got this at a really good price. These are 29 units on this old motel, and we've just been renovating them and bringing them back online. So we'll be running the same strategy here, guys. Again, furnished units and some unfurnished units. So far, going really well. Our current update is we're finishing up electrical, plumbing, and mechanical. Right now on 12 of the units we're renovating. And then once we're done with that, which should be in the next week, we'll be moving into the finished work. So that's when we get to start to put it all back together, start really making it look pretty with our flooring, paint, cabinets, fixtures. And then we'll be able to furnish some of these and get these units online. And then the last sort of phase of this project will be updating the office building. Now, when I say office building, don't think of a big commercial property. This is just literally where the office used to be. It's like a 4-bedroom, 2-bath. We're planning on fixing that one up, renting it out as well. It's also going to have some laundry in that building. But that one, the reason why we did this in phases was kind of the low-hanging fruit. What I like to do when I'm planning out an asset and taking over and getting cash flow as fast as possible, we try to look at the low-hanging fruit, right? Low-hanging fruit was these 12 units that all needed to be updated, finished out so we can rent them out. So getting those all online is going to bring in revenue, and then we'll go do this other project with the office building after that. But overall, this one is going really well. We've been doing several large multifamily ones like this, and they've all turned out well. So I'm excited about this one as well. So here's a really cool story and or project we're doing. So I'm going to share the link. If you guys want to click this link, you guys can go watch this video. And I'll make sure you guys can have access to that, but you can check it out. So this is Tim. Tim is I would call him our sober living property manager. He's currently running this project right here in Billings, Montana. All right, this one's up on Rimrock. And this video is all about kind of the story of what they're doing. And the reason I want to highlight this, guys, is for some of you guys, it might just, maybe this won't resonate as much, but others, I think you will think, hey, what is my money actually, like, is my money making a difference? I like to say investing with purpose. So this specific asset, we bought this property and then we furnished it. And now Tim is helping us manage it as a sober living home. So Tim is actually a recovering addict. His passion is to help other people in that phase of life, right? And what he has done is he literally does all the operations. He's helped recruit these people. He has a network of people coming in and he cannot fill the rooms fast enough. Like this house we filled up right away. I think this house we have 12 different beds in this house, maybe more. It might be more like 14. But we basically do 2 beds per room. And then he helps find the people, helps them get back on their feet, and he manages all that. So really cool way that we're helping impact the community. And if you guys will watch that video, you can see what it's all about. But the reason I'm bringing this up is we're doing our second one of those. Because as you heard, I just said, Tim has got more leads than he can handle. Like he's constantly having people reach out all the time of like, hey, do you have more rooms? Do you have more rooms available? And he's like, no, we're full. Or I had a guy move out. You're in luck. So we're doing our second one right here in Billings. And this was a property we took down with Cathedral Group Capital Fund. So this will be a sober living home right there. Great location in Billings. And just wanted to highlight that that's coming down the pipeline. The other deals coming down the pipeline are our fix and flips. So this little screenshot over here, this shows you a bunch of deals we have in the pipeline. And we've already got a couple of them still going through due diligence, getting our bids, confirming all our numbers. And then we'll be taking down a couple more fix and flips, just like the one I showed you on this slide. We'll be looking for our next couple of them, but want to let you guys know they're in the pipeline. And we should be doing that here in the next, really in the next month. In November, we'll be definitely taking those couple, at least one, maybe two properties down that we're going to fix and flip. One last thing before we wrap up Cathedral, I wanted to share a little bit about the returns that we've been distributing. So we sent out our Q3 distributions and we hit our full preferred return, which I'm really excited to share. And to give you guys a feel for what our return looks like, for the A-class investors, so those people are investing $250,000 or more, they are the A-class shares. So all the folks who had an A-class share got a 14% preferred return on their money this past quarter. We also have B-class at 12, that's 150 and above, and then C-class is our minimum 50 and above. But happy to report that all our investors receive their distribution for their full preferred return. We're actually projecting right now a net profit around 20%, and that's a cash on cash number. So what we've done, just to make the accounting a lot simpler, is we will distribute the additional, essentially it's the waterfall. So if you guys are familiar with a structure where it's like a preferred return, so I'll give it to you in a nutshell. This actually shows it here on this little diagram I have over here. This is our one pager for this fund. So first 2% goes to the management fee. After that, we have the preferred return. So if you were the 14% pref, you got the next 14% of cash flow, right? Then after that, until we get to 22% cash on cash, 80% of that goes to the limited partners, which would be you guys as the investors. And then 20% comes to myself as the GP, okay? So I structured this to where once we perform really well, you guys would get more upside. So I explain all this to say, when we get to next year, we will be annually distributing the money from the waterfall. So again, we paid 40% quarterly. When we get to next quarter, again, if we continue to hit projections, which all indications are we will not only return another 14% from the quarter, but we'll also return the additional profit from the waterfall. And we'll continue to do that once a year to be able to manage that a little simpler and not make it an accounting nightmare. But I think every investor is pretty excited that they're getting 14% return on their money and they've still got all the upside you have with this deal. I did want to let people know that we do still have shares available of this deal. One of the reasons why this preferred return is so high is that we are actually doing a 2% bonus. So for the first 2.5 million we raise, that's why you bump up to 14 versus 12, okay? So once we hit the $2.5 million threshold, all the future shares at 50,000 and above will be at 8%. So all this stuff shows you in this little table again, 8%. And then eventually our A class will go from 14 to 12. But good news is for you guys, if you're watching this and still interested in maybe adding more capital to this one, or maybe you want to diversify from another deal, or maybe you're a brand new investor just watching this, we still do have room as of today to get these A class shares at 14%. So again, whatever your return would have been, you get to add 2% on your preferred return for being an early investor. Okay? Let us know if you guys have any questions on this one at the end. I'm going to move on to our Ponderosa offering. This is our debt offering. This is much simpler and a really, really good option for people who want to have a little bit of flexibility in their money and keep their money working. So before I go to the returns and how we've been distributing so far, I want to highlight the deals that we've done thus far on the Ponderosa debt offering. So this little screenshot here is our deal in Rawlins, Wyoming. This was a fix and flip that we bought using funds from the Ponderosa debt offering. So this one went really well, and we sold this one in, I believe this was sold in September. This one we had held on for a little longer than we thought. Sometimes flips take a little bit longer, but the benefit of the debt from the investor is we still pay the exact same return. So we paid our full return on this one, and I want to let you guys know that we have funded another opportunity in Rock Springs. That's a fix and flip that we're working on. Actually, it could be a fix and flip, or it could be us refinancing, paying back the debt and holding the asset. I want to show a couple other deals because within this offering, we can also do buy and holds. And this helps me to further secure our investors. So I've got a couple buy and holds that are secured by these couple of properties here in Wyoming, these are legacy assets I have that have some equity, and we're securing them with the debt because we want to keep. So myself as the general partner, my job is to keep this money working, right? The more I can keep it active and make a return, the better return we can give to you guys. So on that note, let's kind of show you guys some of the returns on this one. So this one's much simpler to understand because it's just straight debt. We're paying 12% to the first $1 million we raise. Okay. Again, just like the last one, we're incentivizing people to come in early. So you're going to get 12% on your money. But here's the cool thing. Right down here, I highlighted in yellow. We still do have shares available, but you guys can actually request a withdrawal within 90 days. So that must be approved by the limited partner, the sponsor, myself. The way I designed this, guys, was I wanted to have people have an opportunity to get a good return, whether that be 10 to 12%, but still have the optionality to pull it out, put it into another deal, or maybe if you have a life event change, whatever happens, I wanted to give you guys more flexibility. And that's why we structured it just like this. So again, 10 to 12% on this deal, and you can withdraw within 90 days. A couple other things I wanted to explain on this one is we are expanding this. We've had a bunch of success so far, a lot of good feedback from other investors who love the flexibility and love that we pay. This one we actually pay quarterly. So everyone each quarter gets their quarterly check. And that's one we just distributed as well, just this in the past couple of weeks. So we paid all our investors their full 12% interest, and they're just really excited. So another one I wanted to share with you guys, if you are interested in diversifying, or maybe you know someone with a self-directed IRA that they want to use. This is really good for people with retirement funds that can self-direct them, because they can pick the asset they go into. They're making 10 to 12%. And just a lot of good benefits. But it also could just be cash, right? It could be cash you have sitting on the sidelines that's not making any money. You can go deploy it here and still have the flexibility of the 90 days. And guys, people always ask, like, if I need it in less than 90 days, could we do it? We would absolutely try to accommodate there, but we try to target 90 days. That way you kind of give us some flexibility. Okay, wanted to share a little bit of what's new in my world and what we've been up to. We just are doing our second Revive Summit. So our first Revive Summit was back in July, went really well. And we had about 25 people in July. And this past time here in Houston, we had over 50 people attended our Revive Summit number 2 right here in Houston, Texas. You guys could see some of our speakers that we had at our last event. It was incredible. You could look at all those handsome faces, but man, the biggest feedback from this event was so much value you could see Ryan in there in the middle. He actually did more of a mindset breakthrough. Like, he talked more about not just like in terms of financial capital, but in terms of relational capital and just making sure you're balanced in other parts of your life. People love that. But then all the other speakers, you could see a bunch of different bankers, a bunch of different lenders, also infinite banking. It was all about like the financial tools that you need to continue to grow your wealth. I wanted to bring in all these speakers to give you guys a ton of help. So we did that. And we also had a workshop on the second day to make sure people went and implemented everything they learned. So if you guys are interested, if you are an investor in Bighorn Capital Fund, we always issue you guys a free ticket to come check out the Revive Summit. At least come check out one of them. And I would invite anybody who wants to come join us in January. We've actually already set our date. It's going to be January 23rd and 24th, right here again in Houston, Texas. So next quarter, beginning of next year, I'd love to see you guys come out, check us out, and have a good time. And tons, I'd even mention all the networking, just great opportunity. And I just love getting to hang out with you guys and get to know you a little bit better. And you guys also just get to see a little bit more about what we're doing behind the scenes. A couple other photos here. This is me at Collective Genius. This past week, I presented in front of about 150 to 200 of like the highest level investors in the country. I've been part of Collective Genius for 3 years now, and I joined it because I wanted to take it to the next level and really level up and be around other high level real estate operators. And I feel like this group is probably the highest level one in the country. And I had the honor of getting to speak to them about my journey and how we've grown over the last 3 years, and really how I've used my brand and content and marketing to grow to where we're at today. So anyway, that was a really cool opportunity I had and wanted to share it with you guys. And then the other one, last but not least, down here in the corner, we've got our 120 unit apartment that you guys may have heard that we bought. And I did update that on our last investor update that we had just purchased this, but I wanted to share it again. We've been getting into this one, getting new tenants, really getting a hold of the operations. And yeah, just really excited about this. Is our largest acquisition, 120 units in Evanston, Wyoming. I did have one more bonus one. I did want to mention up here in the top left-hand corner, we got the Revive Club. So this was another offering we did for any type of investor. So Revive Club, these are actually partners with us in the deal, so they can be accredited or non-accredited. We had about 40 people come along and invest with us in Revive Club. So it's a really cool offering. We're doing a lot of cool things there where we're helping people build out their track record. And we also help them apply for 0% interest credit cards through Chase, which allowed them to invest a little bit more and learn the process. And just a really cool thing that this is more of a passion project where I can help more investors get started on any level. Okay, I'm going to wrap up with this last couple slides here before we go to Q&A. So this is our latest portfolio I want to share with you guys. I bought this up in Billings, Montana. And this really aligns with kind of making your money do good work for more than just you, right? Having an impact in the community. This, guys, if you guys go look at these pictures, which on that note, this is why I highlighted in yellow. If you guys don't have access to Company Cam and you'd like to have it, this is where I've been encouraging my contractors to put all the photos from all of our projects. So you guys can go in and check things out, look at properties that are being invested on with Ponderosa or Cathedral Group, or even Lilac Way. You'll see less from Lilac Way because that one's all done and the work's done. But this is a great way to be able to go in and check on different assets and see how things are going. So for example, if you went in there and popped in there, you'd see this one on 38 Lewis, this one on 219, and these ones on 213. Guys, you should see, you could pop in there anytime you want. The condition of this property. This property had been overrun by drugs, just really bad reputation. This guy was the definition of a slumlord. Like all he did is collect rents, did not repair a single thing, and these things got run down. They had a really bad, one of his assets that we did not buy has one of the worst reputations in Billings. But some people might be like, well, why would you buy that? Well, here's why. Look at the area. This is on the map. This is two of those assets. This is one of the best areas of Billings. Like this this is downtown Billings, right? Here's your airport up here, downtown 27th Street. So those of you who know Billings, like this is the heart of Billings. Right in here is where Moss Mansion is in the historic district. My wife's parents live here. Me and my wife actually owned a house several years ago here. It's a beautiful, beautiful area, a really nice part of Billings. So these properties were in great areas, but they've just been neglected. And honestly, they were an eyesore and really a concern for the neighbors and the whole community. So we're really excited to go in there. You guys could see sort of the condition, but we're going to be renovating these. Several of these houses, we're literally taking all the way to the studs and going to completely transform them, put in good tenants, provide housing. Another one of these properties is going to be another sober living is the plan. So many cool ways that we're helping the community and being able to create a very profitable business venture. So really excited what I'm doing. Want to share with you guys. And again, I'm really excited to tell the story of this one, just like we did, as I mentioned on Hillside Casper, where you're able to really transform not just like our partners' lives and our contractors' lives and my salespeople's lives in terms of like getting them to have an opportunity to make a paycheck, but getting able to transform the community's lives, right? Neighbors. Like when you guys hear some of the testimonials that I got from some of the folks in Casper and just getting to see it, like every time I go to Casper, I hear it every time. They're like, oh my gosh, thank you for so much for what you guys did up there. Like that complex was unsafe for kids. Had all these police calls and all this different stuff. And it's really cool now that it's a safe place to live and providing more housing. So I'll get off my soapbox there, but it's just really a big passion of mine. And especially when your investment, again, invest with purpose. That's what I've been trying to really lean into. And I know a lot of our investors are really excited about that. With that, before I go to Q&A, one last thing is I do want to mention, and I touched on this earlier, offerings, you guys can go create a free account and see all of our different offerings. So right now, we, as mentioned, Cathedral Group, this is the equity deal where you can get up to a 14% preferred return. I didn't mention the IRRs and more the long term, but we're projecting between 20 to 30% of as far in terms of an IRR, which is essentially your apples to apples return year over year. So this is a really good deal. We're bringing more investors in. So if you're interested, or if you know anyone who else might be a good fit, please let us know. We'd love to get them. We're really planning to grow this one. And second one, the third offering I talked about today, Ponderosa. This is our debt fund where we're offering 10 to 12%, and we have the 90-day redemption. So both of these offerings are available, and we're growing them. This is going into 2026. This is going to continue to be a big focus, is to raise money for these different offerings. So wanted to share that with you guys. If you're interested, please do reach out. Go check out all the information on our Avestor platform. So with that, I want to open up to any questions.